righty, let's see, manage participants, chat. So in my continuing effort to expose all that is wrong with the Zoom platform, there's no way to save your settings so that when I log into a meeting, it opens the text chat and it lists you guys and it mutes and you literally have to do everything over every time you get here. Bad design. Okay, let's see, participants, there you guys are. And it's got all these different ways of seeing who's here, but it won't save however you set them. You got to redo them every time you log in. All right, oh good, we have a decent turnout. I was hoping that would be the case. We'll give everybody a few minutes. I assume you guys can hear me pretty well. I've actually figured out a way to check that, but say yes if you can. Hello, Kawika. Can you guys see my my calendar? That should be what's up. Okay, cool, thank you. All right, we'll give it another minute or two for everyone to roll in. While we're doing that, a couple of things. If you have not had a chance to go and read some of the chats going on in Anything Goes chat and in the process shares, you should be doing it because there's all kinds of great stuff there from everybody. After I mentioned it last time, people stepped up and I appreciate that. We actually have lots of contributions now. And you know, don't be afraid to put your crap up in here. You know, God, if I showed you some of my really early ones, like I posted one of my handwritten notes, that one's actually reasonably recent. That one's about 6 years old, I think, something like that. I was working out the order flow kind of and integrating that into my technical analysis. And yeah, I cannot encourage you enough to do this over and over and in as many ways as you can try, and flowcharts and linear and all that. So anyway, all right. Now, I have to just preface this session with it actually is a topic that's apropos this subject. I am still feeling crappy, and I'm at the kind of the crap beaten out of me, not rested stage, which is actually a little easier to handle than the one I was in a couple of days ago, where I have too much energy for the pain. Now I'm in pain and the energy's gone. So I'm going to try to go through this and have it not aggravate. Basically, you know, this stuff isn't important to you guys, but just so you know what I'm doing here, spinal injuries create lots of different kinds of pain, and it kind of migrates from one to the other. And right now I'm dealing with a migraine, and it makes it really hard to talk. So I've got some strong coffee. Sometimes that helps. But if you hear me kind of strain every now and then, that's why. Anyway, but that's such a good introduction for this topic because thank you. Thank you, Jerry. It's never truly better. It's just degrees of shittiness, and usually I can function pretty well, but I was crawling around on the floor routing cables for my new server, which is a really stupid thing to do when you have some of these issues, but you know, humans are humans and I hate to ask for help. So I end up doing stuff I could pay somebody $10 to do for me. All right, so anyway, let's go back to this session, because this session, again, I took out all the setup stuff. We originally were going to talk about a couple of setups today. I moved that to the one that's Wednesday morning, and because I really want to focus on process and comment on some of the things that you guys are saying in the Slack, because you're really starting to get it, even though you may not realize you are. So that's also a purpose. I put this up just to remind I'm talking about the calendar now. I put that up just to remind myself to give 2 seconds on this. As I've said in most of the webinars, I don't do a lot of prep anymore. I used to, you know, spend hours looking at price levels and technical patterns. And, you know, I don't know if it ever actually gave me an edge or not. It made me think I did, which, you know, have an edge, which sometimes is just as important as really having one, the confidence. But one thing I definitely do is I look kind of, you know, this thing I posted that Lee gave me some crap for, you know, and rightly so. But this is kind of the way I look at stuff. Let's see, what day are we on here? Tuesday. I think it was down here. Yeah, I was talking about that I got, you know, back up to scratch or give or take scratch. And you know, how I look back on these things, and yeah, this is really good, Trader PD, by the way. And so one of the things that I do on Sundays is I try to just get context for the week in terms of news flow. And yeah, obviously FOMC is the biggie this week, and that's why I put that session Wednesday morning, which is, I believe it's in the calendar. Let's just double check. Yeah, Trading the Open, putting it all together again is the 11th. Yeah, the 8th. So that is this one. I moved this part of it here to the one on the 11th. So the 11th is Wednesday. Yeah, so we'll talk about that stuff, but we'll also hopefully get a good open, and then it'll quiet down and we'll get a chance, you know, before the FOMC to kind of talk about integration. So, so what I'm doing with the one today is this stuff right here, the setup and process integration, but it's actually a lot more than that. So anyway, I wanted to mention the calendar, and then let's put all this down for a second. And this is the one other place that I do that. You know, you guys normally see the view that just shows the day in my equivolume charts, but I do have some settings here where I'll sometimes go out, like, you know, let me see, 5 days of 15 minutes. And it, you know, kind of gives you a good idea of just what the recent, you know, ebbs and flows have looked like. And if there are any really high volume events, and again, I just kind of do this on Sunday. I generally don't do it any other time, but this jumped out at me here. And, you know, if you're not sure what I'm talking about, really heavy selling, you know, the volume in all these selling attempts was strong. And, you know, then it kind of flattened out, you know, so nobody jumped in to buy, but, you know, there was resilience. Then, you know, this is the behavior we've been getting, this right before the open or right at the open, you know, let's run the prices up so the shorts are trapped. We saw that Friday, right? I mean, there it is. And one of the things I think there's two mistakes you can make here. You can read too much into the down moves, or you can read too much into the up moves. And right now I'm cautioning you not to read too much into this behavior. I've seen this over the years. And generally this, you know, I hate to use the word manipulative because that implies collusion. And I apologize, this session some of the language may not translate. I'm gonna try to keep it slow and use words that I know translate well, but that continues to be a challenge for me with some of the other countries that we have with us. Anyway, but this particular behavior, you know, you see it a lot, and it, you know, it'll be a news event or it'll be the payroll report, but you know, the cause is irrelevant. It's the behavior. You know, we push it up and then they can't sell it off, and then the next day or the overnight they manage to do it, and then, you know, same thing here. So this is just why I would really caution you not to read too much into that technical picture that, you know, about going through all-time highs and going to 3,500 in the S&Ps. It certainly could happen, but right now, you know, I'm expecting more big up and big down days. That's the sum of what I'm saying. And, you know, I don't trade my expectations, but it's part of this whole thing of keeping your mind kind of in the right place, I guess, or synchronized. That was one of Sommer's. That was perfect. What Sommer said about synchronizing with the market. Oh, and I do the same thing with internals. You know, I used to actually trade off internals, but now, you know, you can see these are 5-day internal charts, and so I'm looking at the advanced decline for the S&P and for the Nasdaq, and then just the cumulative tick. You know, this is the tick over 5 minutes for both the tick of the Nasdaq and the tick of the S&P, and that's just, you know, take all the advancers and subtract all the decliners, and at any given second that's the tick, and then this is the sum of, or the net of it over here. And so one of the indicators I used to use was cumulative tick, which kind of adds up the tick during the day, and this is a way to see underlying strength, and we had it Friday. The trouble with this is it takes a little time before you know, it shows you anything. So again, the reason I'm showing you guys this is I'm not seeing anything here that says that we're going to just stop and go one direction, you know, for the next 6 months. However, we do have the holiday bias, which is good all the way through December. So, you know, we certainly could rally through December. So, you know, I know some of you have trouble trading short, and that's something you need to get over because most of the money is made on the short side. I'll explain that in a second. But also, you know, we all need to be mindful that just because it looks technically like the market is, you know, behaving like it's toppy or it's a blowout, top coming or whatever. That doesn't mean that's the case. You could argue very easily that this was a perfect correction in an uptrend. The trouble is those haven't followed through. So we're at the perfect spot to see if in fact this one does. And if it does, the only thing you can do is just cover your eyes and hold your nose. And this is another docism, and get long. You just can't argue with this pattern if it does go north. And that's what I was talking about when I was responding to Lee. And I was saying, the behavior that creates that, I think that was in Anything Goes group chat. I was talking about how, it'll just blow. And maybe it wasn't here. Let's see. I thought it was. Anyway, you guys all need to keep up, and I need to too. There's times when, you get away and a lot gets posted, but somewhere in here, maybe it's here. I think it is over here. No. Anyway, somewhere in here in one of the discussions, I talked about that, how, once we actually blow off, it's just purely a momentum trade. So anyway, I'm going to index this thing and put some notes together about the Slack in the next few weeks. So it'll make it easier to find stuff. But anyway, all right, so let's go back to, is it in questions for Doc? Yeah, that is where it is. Thank you. Yeah, no, I know there's ways to search. I just don't want to do that while you guys all sit here and watch me search. I want you guys to get in the habit of looking for it. There we go. Yeah, this is the discussion here. And I even shared this to the announcements and said, you guys really need to read this. Lee made some really good comments. Yeah, this is it right here. Okay, thank you. That's where it was, guys. So, my point was, yeah, this part right here, you want to be like water, but I'm not contradicting myself. What I'm saying is, if you don't have context, then you're going to be like water, getting flushed down the toilet. You're just going to go all the wrong directions. And if it feels like that, guys, if everything you do just doesn't work, take a step back and evaluate. And that's the purpose of the process. But at the same time, I am just not seeing the energy that in my years of experience creates that kind of blowout. Now, anything, a trade deal could make it happen, or, lowering interest rates, that would be a big shocker, right? There's a million ways that we could just, rocket up to 3,500 or 4,000. Who knows? I'm pick a number. Doesn't matter. But it just, at the moment, the kind of price action and the energy, and this is what I was talking about Friday, it's not there. It's one big pop that is in low volume before the open. And then, you can see right at the open, they try to push it. There's some high volume moves. And they just can't get it going, and yeah, if you got long, you could have made some money, and Lee did, and that's awesome. And that's exactly how you should have traded this. But what I'm saying here is, part of being a mature trader is understanding that that is not so cut and dry. You could take 4 traders and there's 8 different ways to make money with what the market's doing. And so you could have played this a lot of ways. I said that I got back to scratch or up $100 or whatever it was. I don't think I had a long trade. I think they were all short. And that's just, that's part of me. I like to, be a contrarian. And when they work great. I mentioned I had done that up at, I was playing the NASDAQ. And I think the first time it popped up over, yeah, this energy right in here, right when it got up over, it's going to be hard to get this to come up the way I want to see it. Let's try that one. Yeah, okay. The first time that it did this right up here, and it got up to 04, and there was just nobody buying up there, and we pulled all the way back, into 94. So that was a really great move, low risk, because we hadn't broken. I mean, your stop was a new high, and you had a perfect little up thrust too to get in there on. So I'm showing you this stuff again. This isn't, teaching you setups. This is context discussion, okay? That's what we're talking about here. And that's what the purpose of this session is this morning. I want to ask you guys to all ask yourself a question. Oh yeah, Mentos is good. I actually put that there on purposely. Exactly, so I could find it because that's just such a visual, if you've never done it, just go on YouTube and you'll see it. That's what they look like. I mean, it just literally looks like a volcano. And then once that happens, this is really important. The thing that happens after that, the way you have a blow off top is there'll be this enormous burst of buying, not like what we saw Friday. I mean, you'll know it when you see it. I mean, you just will not be able to get a long entry. It'll just keep going. And then all of a sudden the music will stop and price will just stop. And guys that trade the pit, if you ask, let's see, Hogue, He has a really good story about this. I think it was his first or second week trading in the S&P pit. And he saw all this energy going up into new highs. So, you know, as a rookie, of course, he bought the breakout. And then he turned around with his fill and stared at a silent pit where literally the action had just come to a screeching halt. So here he is long and everyone starts selling and he just totally was on the wrong side of it. And, you know, we've all experienced that. Okay, so what's the purpose of the market? Yeah, our purpose there is to extract money, but I want to ask you to think about it from the market as an entity point of view. So not the they that's always trying to rip you off, or, you know, the they that runs your stop. That's not what I'm talking about. I'm saying, what is the purpose of a market? And, you know, you can go through all the economic definitions of, you know, supply and demand arrives at a price and okay, that's all true, but that's not what I'm looking for. What I'm looking for is the following, and this is a docism, but it's also a lot of traders have the same point of view. I'm sure Lee can identify. It is a business, exactly. And what is the purpose of that business? It's very simple. The purpose of the market as a business is to make fools out of as many people as possible. Think about that for a second. The more people that the market can make wrong at any given second, the more money there is to be made by everyone. However, futures are a zero-sum game. If you're not a math person and you don't understand that term, a zero-sum game is very simple. It means that for everyone who wins, there must be a loser. None of this conventional wisdom bullshit that you hear from the investing community or from TD Ameritrade or from, you know, Charles Schwab, that you buy when value is discounted and then as value increases, everybody gets wealthy. Bullshit. That is total and complete nonsense. That was the paradigm in 1950. When I was, you know, I was born in 1960, and, you know, my parents were part of the, you know, the booming middle class in the United States, and everybody was getting rich and the stock market was going up, and my father was an executive at a toy company that was doing very well, and, you know, you couldn't lose. That was the, you know, so all you had to do was buy value, you know, buy Mattel stock when they first went public, and there were many millionaires, not as many as Apple, but you get the point. Anyway, so think about this again. The purpose of the futures market is to make fools of as many people as possible. So every time you do something wrong, you have to keep that in mind, that you're actually doing exactly what the purpose of the market is. It's making a fool out of you. So there's two ways you can respond to that. You can go cry and, damn it, I lost $100. I'm such an idiot. You know, go have a beer, go smoke a joint, whatever it is you do, go for a run, go to the gym, you know, and the bottom line is you're processing it wrong. You're making it about you. And it is about you, but not that way. It's not about what you did wrong and Mr. Market spanked you. It's about you went in with a hypothesis, and Lee put this really well, and you tested it and you were told you were wrong. But the mistake that all of you rookies make is that you take that personally instead of taking it into your business. And that's why I'm pushing this process thing so hard. You know, you guys are all sharing stories that are really helpful for everybody. You know, I've been working on this for 2 years. I've been working on this for 4 years. I've never been able to be consistent. But how many of you are still slogging at making a process? Trust me, you will not succeed consistently until you do this. It seems like it's a total exercise in futility sometimes. It seems like you'll never finish it. It seems like, I mean, look at this. You know, I literally carry a pencil and paper, and when I'm anywhere, I will sit down and scribble. And some of my best ideas come out of that. And this one is a really good one for all of you. Somebody posted their process in a flow chart, and I commented that one of my older ones was like that. Actually, all of my older ones were like that. Okay, so they were very, you know, yes, no, go to step 2. And this is really important here. On the days that I felt like shit and had pain, and, you know, you guys are kind of living with me through that, the answer was very simple. Don't trade live. Either don't trade at all or go into the sim and practice. Because, you know, gosh, if I can successfully trade while I have a migraine, imagine how good I can be when I can focus. Okay, so that's the you part of it. And you know, I just don't know how many, you know, I can criticize you guys. I can call you out in the group and make fun of you so that you'll go back and get mad and come back and do it better. There's all these different ways as an instructor and as a trainer, I can try to get you guys off your butts. But until you understand how critical this piece is, it will never make sense. And I know some of you still have not done this. You know, there's 25, 30 contributions up in the Slack, and that's great. Get started if you haven't. It is never done. It is always progress, not perfection. You saw me say that in here. But at the same time, if you don't actively do this, you will never improve. Okay? And like, here's another one that, you know, I actually got really, this was when I was narrowing it down to becoming linear. And so, you know, I want to just go through this one because it kind of, assimilates a lot of things that I've said to you guys over and over again. So that's why I'm showing you this one. Not necessarily that this one's right or wrong or whatnot, but some of you are on this track, and I think it's a really good one to be on because it keeps you in a loop where, you know, you reset and you go back and you ask yourself the same questions, and several of you are taking this approach. It's a good one. Now, here's the reason I don't do it anymore. The reason that mine doesn't look like that, mine looks like this one, and I was digging out old ones. So yeah, cool. All right, that's the current one. The reason mine looks like this is really simple. And again, this is where the you part comes in. Because of my physical limitations, and because some of you know this, some of you don't, I moved back from Colorado to live with and take care of my mother, who's 89, and she has Alzheimer's. And that's challenging. And so, you know, when I first started doing that with her and she'd come in and interrupt a trade and I'd lose like $5,000, I mean, I was like, God, I really need to figure out a way to make it so that I can just walk up to the computer and execute. So that's when I started to get away from this, because this was a really good behavior that I taught myself. And I even had one where, gosh, I think it might have been on the paper one. Yeah, okay, see where it says B, 5-minute context. I used to have a little, if you've ever watched people play lightning chess, you know, where they go back and forth, I used to have a little timer on my desk. And from the moment I sat down, I would bang it and it would start timing. And I wouldn't let myself take a trade until I had looked at the context of the market for at least 5 minutes. Okay? Now, how many of you, I'm not even going to make it a question, I'm going to tell you as a statement that at least half of you, if you do that, will find your trading improve the next day, if you just commit to doing that. So, you know, you don't need to necessarily, you know, only trade the first hour of the open and then go away, you know, but this is the way you solve that kind of, how do I not sit at my computer for 8 hours a day? And the way you do it, the way I got to the point where I could just sit down and see a setup and execute, was that 5-minute rule. So one of the things I'm going to do in this session, to the extent that I can, is try to give you as many examples of that that were real, my true life, real examples. And, you know, just think about it. If I'm in pain and I get up out of bed and I'm staring at, you know, my dome across the room, and it's like, oh, wow, look at that. You know, that's a perfect HMOMO setup. Now I know my skills, and I know my experience is good enough, and I'm confident enough in the setups that I'm trading actively the last few years that I don't need to take 5 minutes. I can do it in 5 seconds. But until I put this rule into place, I would routinely make errors just because I just hadn't really looked at the context. So cool. I'm glad this is helpful stuff, and you need to do that. All of my process sheets are in fact laminated and on sleeves on my desk. So that's a really good one. And also, he's not a member of our group, but he is a member of Surfing the Markets on Facebook. And I want to show you something that he shared in the Top Step group. You might have seen it. This is Dennis G, G-E-E, I believe he pronounces it G. This is his desk, and he's got a really good way of doing it. And I'm trying to see where I stored it. I clipped a picture of it, and it's probably in here. But I want you to see this, because this is how he's not only got it laminated, but he's got like a little dashboard of, oh shoot, you know what, I'll find it as I'm talking, and so just ignore what I'm doing here. I know I can find it by the date of when I saved it. Let's see. Oh, you know what? It is not in this folder. Anyway, I'll come back to this. I really want you to see it though, so give me 2 more seconds to look. Let's see, it's not in there. Nope. All right, well, somewhere. He has a really good setup, and he has these plastic holders. That is it in here. That's mine now. All right. Well, anyway, I don't want to bore you guys while I look for it. I thought I had it right there, but that's a good idea too. You know, they're basically just those little plastic document stands, and he's got it like right in front of where his keyboard is. So that's a really good way to keep, you know, your process in your face too. Again, I do that, but I also keep it, you know, on this tab, and I keep that tab as, you know, the top pin tab all day. So whenever I get back to my browser, it's in my face. And I also throw over here, and this is something I haven't told you about, but I throw over here just a recent chart or two to keep my mind focused. And this is something that we're seeing a lot of, you know, that behavior we saw Friday. This was a previous day, but just this idea that if they can get the market moving one way or the other in the morning, we either get a flip or we get what you saw Friday. So that's why I've got there. It's just a, you know, a little reminder for me. So anyway, back to the, you know, the purpose of the market is to prove the most participants wrong. And it's a zero-sum game. So if you put that together, you're going to go through a lot of phases. And listen really carefully to this, guys, because again, I'm sharing about my experience. And you know, if you ever go to support group meetings, you know, whether it's for depression or cancer or AA or any of those, you know, people get up and they share, quote unquote, you know, and what they share is their experience, strength, and hope. That's like what you'll hear from AA people, or you'll hear that in a, you know, cancer survivals support group. And, you know, let's break that into what those 3 things are: your experience, your strength, and hope. So your experience is really valuable if you have it, you know, and for a bunch of people that have all been through cancer together, that's a shared experience. Well, for your own trading, you know, you will have shared experiences with, you know, other people's strategies that you read, or watching, you know, who somebody got funded doing XYZ and Top Step. And all these different ways you're going to share experiences. But this is a really important point about that. You need to filter that into what's useful for you. And so the experience part is critical. And, you know, I shared that thing about how, you know, they makes a drawing out of a bunch of dots. And the strength part is really important too, though. Now, none of us are in recovery for trading, but it's a very good way to think about it. You know, trading is brutally difficult emotionally as a business. And again, we keep coming back to that. Sorry, my head's hurting a little bit. We keep coming back to that. And so that's part of this session. You really need to make your trading a business plan, and not just, you know, once. You got to do it almost every week, every day. So for example, Amy said, you know, she started to think about some of the things I said about scalping and getting a bigger account at, for example, Top Step. And there's a reason, again, from my experience and sharing the strength that came out of that, you cannot emotionally divorce yourself from risk if you're trying to trade an account that's, you know, and again, we're just using Top Step's sizes. I don't want to have the argument about how much margin you can actually do with that much money. You know, that's bullshit. Again, that's nonsense. Let's get back to the point, okay? If you're trading a $50,000 combine and you've got 5 lot, you know, keeping in mind the scaling and all that, it seems like, well, that's all I need, right? And again, I keep saying to you, no, that's not right. And many of you let that go in one ear out the other, and you shouldn't do that. You should listen to what I'm saying, okay? It is very easy to get $3,000 upside down like you saw me do on Friday, and that was real money, guys. That was not a sim. And if you have a large account where that is not even a rounding error, then you can think about the risk reward potential. And what I was trying to do there, and I wasn't feeling very well and I didn't execute it well, but I'm glad you guys got to see it. I was trying to put on some risk with the idea that this pattern was going to break down and fill that, which, you know, a large percentage of the time it does. And if it doesn't, your risk is relatively small. So for me, that was a relatively small risk if you look at the potential of the trade. You know, and when these do, you know, collapse, they tend to do it in the same way that they go up. And we've been seeing that for weeks. So that's the thinking there. And it's not about the money, but imagine, you know, if you were trying to execute that in a 50K combine, with a $1,000 daily loss limit and a $1,000 weekly loss limit. You can't afford to be wrong. Even if you're an 80% trader, 80% of the time you're right. The 20% that you're going to be wrong with that math will make you fail. End of discussion. It is not possible to get through that. The statistics will catch up with you. They may not do it in the step 1 or step 2, or maybe it'll be the first week you're funded, but how many traders over and over, and I know this is many of your story, you got funded and you blew your account up. Well, it's because you didn't have those processes in control and because you were trying to trade too much size with too small an account. So again, and I will talk to anyone individually about this that wants to understand it better. You should be shooting for the absolute largest account you possibly can, and you should go as slow as you can. So that way, even if you have to take 6 months to finish the combine, at $300 a month or whatever it is, so it's $1,800. But then, just think of all that experience. And once you build that cash up underneath you, then you can really make that account sing. Think about it, 15 contracts. On any of these really big moves we have, you could have 6-figure days if you can learn to manage risk. But you're never going to learn to manage risk doing the, I'm trading 1 lots in a $30,000 account or $50,000 account. What you will learn doing that, though, is how to make money incrementally, which is the scalping thing. And that's why, over and over again, I keep coming back to all trades are scalps until they prove otherwise. And if you have no other setup other than being able to scalp 1 lots, you could get funded just doing that. You just have to be patient. I posted something else in the Slack that is really, I think, useful. Let's see, where did I put that? I posted some sample, it was here. All right, who wants to help me out there? Where did I post those sample things about that I mentioned I was mentoring somebody and I showed those little grids. Does anybody remember real quickly where I put that? I don't think it was here. I thought it was either anything goes, or well, maybe it was here. Nope. Oh, well. Anyway, the thing I'm talking about is I mentioned I was mentoring a woman who did a combine, and that's one example of it, but where's the rest of it? That's the problem, is these things get into threads, and there used to be a real easy way to see all the media, but anyway, all right. Again, I won't waste time doing that. I don't do that well when I have a headache. My photographic memory doesn't work. Okay, so purpose of the markets is to make fools of as many people as possible. So it's making a fool out of you, and if you're me and you trade, my overall rate's about 86% winners. So that's 14% losers, right? So 14% of the time the market makes a fool out of me, and I'm a really good scalper. You've seen that. I don't think I need to prove that to anybody. So if you take that personally, you're dust. You will just have an emotional roller coaster ride. So what you need to do is you need to understand you're going to constantly be going through these phases of development. You're going to a couple of steps forward, a step back, a couple of steps forward, a couple of steps back, and your process is kind of the nucleus of that, if that makes any sense. It's the way you kind of keep coming back to the center of your thinking. And so mine went from being that flowchart kind of cyclical approach to being this, because this allowed me to just sit down and I don't need my 5 minutes of setup context anymore. I can just sit down and execute an HMOMO as long as I really am clear about what that means and if it has any particular rules. And like I've said, HMOMO has 1. You get in the trade and get a stop between you and your entry, and then the rest takes care of itself. So another phase that people go through. Thank you. Okay, some people are giving me links to click on. That's really useful, by the way, guys. So I strongly, this is it right here. This is the thing I was talking about. So this is literally a log, and you guys say, well, God, when I'm trading, I can't journal. Oh, that's such nonsense. Journaling does not have to be pages and pages of emotions. That's a different type of journaling. This is the way that I was able to help other people, and this is actually her stuff. This is real, because this is what I did. And the only stuff that was relevant here is all that's here. And the mode, what setup we were working, how good a setup it was, what was the result of risk, and how much money we made. That's what the MAE is, maximum adverse excursion. and these are ticks. And so, and then just a comment. And this allows you, if you do that, and then you just loop right back to the next thing, and for me, that's just reset and take another trade. But it really makes a lot of sense to look at it cyclically like this while you're learning to do that. So I said I would share some examples about this loop and what I was thinking. And I think this is a good one for you guys to really listen to, because you can kind of see, particularly if you look at this one and this one, you can see some phases I was going through. And again, this is, I think, around 2014. And what I was trying to do was, see the dome in there? This is sense of order flow. My writing's hard to read, but that's what that says. Am I functional? Am I awake? I'm not in pain. Am I focused? And can I do it any time? I was really trying to get to that. And then, here, what was the context? Remember I said for a while that was really important for me to take 5 minutes before I traded. And then make sure I was on the right side of the order flow. Was I early or bored? Because I used to take a lot of boredom trades. And if so, and then I did a little warm up. I would warm up in the sim. And I've told you guys over and over again, I think that's a really cool idea. Just pick an instrument. And even if you're trading live, do a couple of trades in the sim just to get your instincts working. And then is it asymmetric? And, blah, blah, blah. I had all these different things I was doing. And then the next phase of that was kind of this one. And so this is the end of it, the log, journal, reassess, that's the, the push button, that's this, okay? So the first thing that I always wanted to do, and I think you'll find this amusing, particularly if you have any background with any sort of military training. So, my first step here was to be focused and unemotional. And, you can see how I like to use graphics to catch my attention. And then this is a military thing for Marines and Special Forces. And it's whenever you enter an environment, you should stop and you should look, listen, and smell, because you're accommodating yourself and acclimating yourself to the environment. So that was my next step from 5 minutes of context. It became, stop, look, listen, and smell. You can't smell the market, but you know what I mean. I mean, it was getting a sense of just what does it feel like? I'm not jumping in for a trade. I'm not thinking long, short. I'm just going to open up my browser or my trading platform. I'm going to stop. I'm going to say, okay, what am I seeing here? What is happening? I don't have a bias because I have no idea. Just what do I think I'm seeing? And then the next thing I would do, at this point, I was still using some technical indicators. And remember, over and over again, I have said that I tend to be a contrarian, and one of the errors I used to make a lot, and I still sometimes make it, but I'm better at managing the risk, which again is a theme you'll all continually come back to. But CT is counter trend. So this was kind of a way to keep myself from taking counter trend trades. I developed a ribbon, and that's a triple exponential moving average, and basically I found a way to make it what Sommer's been looking for, where it was really mechanical. And I would only take a counter trend or a CT trade if that condition was true or false. And, you hear a lot of people say they will use like a VWAP as a filter. If we're below the VWAP short, we're above it long, it was like that. And I don't recommend keeping this in any sort of process, because over time it doesn't work. And, that's why I say that all indicators are nonsense, but that doesn't mean it can't have one specific function, like it did here for me, which was to keep me from entering counter trend trades too early. And that should make total sense to all of you. I'm sure you all have done that, particularly if you like to trade counter trends, which, those of us that are the person that's, when someone says, blah, 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 you say, why? That if you're one of those people, you're a counter trend person, you're a contrarian. And I was raised to be one. So it took me a long time to burn that out of myself. And then the next part was I kind of got it down to, all trades are scalps until they prove otherwise. And this idea of knowing the exit before I got in the trade. I'd always done that, but I hadn't really thought about what I was doing. And so I made that a condition, that I cannot take a trade unless I know the exit. And you guys have seen me do that a bunch of times. Like, when I was getting my shellacking at the open on Friday, the NASDAQ was, we were down like, I think the first level I was doing it at was around 82. Again, I don't pay that much attention to prices. I'm looking at inflection points, but I think that's what it was. Anyway, and so that becomes just a total line in the sand. And under no circumstances will I violate that. And so that's called the exit. And it's just, it doesn't mean I'll stop trying to make that trade work. It just means that particular instance of it is overdone. I failed, it's wrong, move on. So, and then I had some other criteria I was using, and this was about trading size. I was trying to see how mechanical I could get with 1 and 2 lots. So that's what that was. And I got pretty good at it, which is why I strongly recommend that you work that area too. But again, this is what worked for me. I'm sharing it because you all need to synthesize it into what will work for you. Okay, and I see these comments all the time. Jerry just said, I always try to do counter trends, still figuring out how to fight it. It's not about fighting it, it's about realizing that that's a part of you. And listen, everybody, this is a really important point. If you sit there and say, God, I shouldn't do counter trends. No, wrong answer. It's not that. Your individualness is telling you that there's a characteristic of your personality that you need to pay attention to. It's that you're going to constantly try to be on the other side of the trade, which is great because you're solving problem number 1, right? When you enter a trade, what's the thing I told you that the only thing I'm concerned with is risk once I'm in it. And the second thing is who's on the other side? Because, remember, zero-sum game, it's going to make a fool out of him or me. So, and I'll be real honest with you. If you look at Friday's trading, for example, I saw some people talking about, getting long on this pop, and some people have faded it up here and made some money. But this type of day is one of the hardest days structures to trade, because if you wait for the open to get a sense of the direction, unless you really jump in early and you read that kind of hidden action, that absorption that you heard Lee talking about, there are no good entries once you get the pop, because it doesn't give you a pullback and there's not enough energy going up. And so that's why my natural instinct here, Jerry, and listen, this is a really good piece of feedback for all of you struggling with that. Rather than trying to make myself into a trend trader who gets in along like this and regrets it, what I do is I just continually work my personality. So I actually turned this day around and made it profitable, and I don't think I took more than 1 or 2 long trades. I remember I took one right here on the first hour retouch, but I think almost everything else I did was short. And it worked. If I hadn't made the mistakes at the beginning, I would have had a $3,000 winner day. And hey, great. Again, never look at it that way. Look at it that, hey, I had the skill to see my mistakes and correct them and make a winner day out of it. And that's the way I look at it. I try to never have a day be a loser. If I'm just not making it happen, just get back to scratch and call it a day. And, if there's days where my P&L is just wildly volatile, and sometimes that happens, I'll be up $5,000. I'll say, oh, wow, this is a day, I could put 50 grand in the account today. So let's scale this up and go for it. And then an hour later, I'm up $2,000. I'm like, damn it, because the energy changed is what that's telling me. Okay. Whatever I was trading at the beginning that was working, those are no longer the conditions. So, that's that reset your brain thing again. That's why this just became, the stupid little piece of clip art became instrumental to my success, because I literally picture that, and I just go, okay, that didn't work, and you watched me do that live. I just went over there and and I don't care about the exit. No, maybe I can protect a few ticks. I just hit that flat cancel and I'm done, and that trade's over. I made a mistake, move on to the next one. And sometimes the thing you have to assimilate is that, well, it's not so much that the concept was wrong, I'm just not making money doing this. And that was to some extent what was happening Friday too. And that's why, I decided, oh, what the heck, I'll let you guys see a couple of attempts, because, my bad execution is probably your good execution. So, you get a chance to see what somebody who's good at it, what it looks like when you do it wrong. And hey, guys, that's at least 16% of my trading looks like that. And, do I go and cry and, complain? No, you just have to make it better. Progress, not perfection. Okay, here's another phase you guys will all go through. You will go through the phase where you've got something working, and you will feel like it's proprietary, like you figured it out. You go, well, I have this setup, and it's like the EMA does this and whatever it is. It might be an order flow setup. I'm not talking about just technical ones. And your first instinct, and listen very carefully, everybody. Good, Jerry, that's really good. But you need to practice forgiving yourself. It's particularly if you're young, and you're one of these, masters of the universe types like I am, strong type A. And we'll talk about that a little bit more too in a minute. But anyway, let me go back to this proprietariness, because that's the next phase that you go through. And again, I'm just sharing anecdotes because I want you to know that, 10 years from now, when this happens to you, or 5 years or 5 weeks, and I'm long gone, you'll say, God, I remember when he said that. And that's what happens with me, and the stuff that I remember from my mentors and my educators. And this one, you're all going to do this. And I bet Lee does this. You're going to have something figured out, and you're going to go, how can I sell this? Is there a way to monetize this setup? It's that good, And that's where all the gurus come from. They get one thing figured out, and then they immediately are running a trading room, and that's why so many of them are so full of shit. Because yeah, you can figure out one setup that works under one set of conditions in one instrument, but that doesn't make you a genius. It doesn't make you a guru. It makes you a furu if you think you're a guru. And so the trick is to constantly check your ego. And and that's why you guys will, if you even tend to stick a big toe over the line, of having an ego in any of these sessions, I jump all over you. And, and I do that deliberately because I want you to understand that, if I can crush you, imagine what the market can do to you, got to think that way. You got to constantly be understanding your limitations, as Clint says. Okay, so that you're going to go through those phases. And here's my comment on the proprietariness. Your shit isn't that good. It just isn't, it doesn't matter what it is. Yes, you can figure out ways to sell it, and to some extent, I guess I'm doing that by teaching you guys these setups, but it's not about the setups. And Lee made that point really well, and I shared it to the whole group in the announcement channel. It's about the process of evaluating the setups and making them fit you and your bubba. That's what it really is. That's the bottom line of that. Okay, let's go back to this conversation we're having in the chat, because it's really pertinent. About forgiving yourself, and about managing emotions, and about, let's see, so Trader PD, I'm the worst one contract trader. The one way to get really good at that is stop doing anything but the one tick drill. And, do the one tick drill every day for $500. So you either trade till you make $500, or you have to trade all day until the day is over. That's kind of one of the ways I used to do it, and I've had mentees do that. And that's a really good way to get over that hump, Pavel, Trader PD. That is how you become a good one contract trader. Do not fall in the trap that, well, if I just did 2 contracts, I'd be fine, because then I could take one off quickly as a scalp and then leave one on as a runner. Yeah, wishful thinking. It doesn't work like that. If you know how to scale, you'll be able to scale with 15 or with 20, but that means you can trade 1. It doesn't mean that your strategy only works with 2. Sorry, that's bullshit. Yes, you can make more money with 2 if you're good with 1, but don't tell me you need 2 to make money. That's nonsense. Okay, what is PMSL? Do I have to, is that something to Google, Lee? Is that British? Like, I just got to look. I don't know that one. Let's see. Internet, okay. Thank you. That is that's a very British thing. UK thing too. I told you I was married to a British lady and lived in Chelsea for 3 years. So yeah, now I get it. Hey, this is the one that really, this one will really make you laugh. The first time I heard the term, and if you're familiar with British slang, a piss up, we're having a piss up. I imagined, a half a dozen guys lying on their backs, taking a leak. That was the first visual I had of a piss up. It turned out it wasn't all that far off, right? So, okay. And remember, this session, unfortunately, is going to be a lot of me talking. I tried to type some of it up to give you slides, but number one, it would have taken too long and hurt too much. And number two, I wasn't sure the sequence I was going to do it. This next thing is really important for all of you. And again, these are all stories about Jeff's journey to becoming professionally, consistently profitable as a trader. And one of them was understanding my personality. So this is really good for all of you struggling right now, particularly those of you that are younger, younger, say you're between 20 and 50, okay? Understand your personality type. as you can probably tell listening to me, I tend to be pretty extroverted. I can be pretty in your face. I'm not sure how well extroversion translates, but an extroverted person is very talkative and they thrive around people and in crowds. And you would think, well, that's what I am. Jeff has to be an extrovert. Well, guess what? I'm not. I'm what's called an ambivert. And many people have never even heard of that term. You know, you hear extrovert and introvert. Introverted people thrive on being able to recharge their batteries by themselves. And extroverts recharge by being around other people. And ambiverts do both. And it took me till I was probably 45 to figure that out, that I was an ambivert. I had always been an extrovert. That part was easy. I mean, that's my natural energy. And so the way that I would deal with something like learning how to trade is, you know, I'd get up at 4 in the morning and I'd have my coffee and type A, power my way through learning how to trade. That's that extrovert type A energy. And you know what? It took me a long time to figure out that the other half of that is, if not as critical, it's probably more critical. And for me, I never did it. I didn't take the time to recharge and do this right here. I didn't have solitude and thought time, and I didn't do it enough. So what I did was I would constantly have 3/4 of the problem solved, but I would be missing the final piece, or I just couldn't quite put my finger on why something wasn't working. And that literally went away the day that I realized that, you know, there's times I need to just get up and have my coffee and then go back and close the door and not speak to anyone for 24 hours or 48 hours. I can go a week and never talk to anybody and not use my computer and just chill out and meditate and focus. And I tell you what, that was the single one thing that made me better at this, because it gave me time to really think about myself and, you know, not to hear other people's opinions of myself, or not to frame myself in terms of what I thought other people thought about me. And stop right there. And, you know, if you're falling asleep, this is important. What other people think of you is none of your business. This is not about proving to anyone on the planet that you can do this. It's about proving it to yourself. All of those other issues with significant others and husbands and wives and parents and children, thinking you're a gambler, you are a professional speculator. And when you get competent in that, all of those conversations will go away. Trust me. I promise you that's true. But that can be a long road. For me, look, I have a sister who's in her early 60s, who's an extraordinarily successful screenwriter. She wrote Mrs. Doubtfire, if you know that movie. Randy Mayhem Singer is my sister. I don't know if I ever mentioned this, but okay. So this is my sister, rock star screenwriter, very, very successful at it, does very well, okay? She has no idea what I do and continues to think that it's gambling. And there's times we don't speak because of this. And you know what? It used to really bother me. It doesn't bother me at all now, because she does her thing, I do my thing, and our things don't always intersect. And, you know, I always thought I had to fix that. You know, I'm very Pisces, you know, help everybody and solve all the problems of the world, and or cry about it if I can. And you know, understanding this extrovert, introvert, ambivert balance, and understanding that what other people thought of me didn't matter. You know, what the Top Step people think of me doesn't matter. What the people on Surfing the Market, what Jeff thinks of me doesn't matter. What matters is me making this work. I mean, that's why you're here. And so let's transition to This is a Business, which is what this is really all about. If you were going to start any business other than trading, you would spend a lot of time thinking about it. You know, let's say you were going to open a restaurant. I mean, just think of all the pieces for that. You know, chefs, food, where are you going to buy the food from? Who's going to launder the placemats and the tablecloths? And where are you going to get servers? And who's going to train them? And who's going to run the back of the house? Who's going to run the front of the house? And what about alcohol? And so let's say you get through all of that. And I've been in the restaurant business, so I can tell you about it. In the restaurant business, it's commonly referred to as thirds. So a third of your cost is labor, a third of your cost is food. And if you can't make a third in profit, you won't survive for 6 months. I mean, that's just the formula to make it through the first year, okay? So what I would submit to you is that, you know, we just did a really simple exercise for opening a restaurant. I don't think half of you have gone through and thought about your trading career as a business. Not, oh, I want to get funded and, start making $100 a month, with my 1UP account, or increase my equity by $100 a month, or whatever your plan is. That's great, but you got to get further out than that. You got to think, okay, if I'm going to do this for a living, and I think every one of you here would love to be able to trade for a living, then number one, you're going to need more money than you think. 150 grand will not be enough in the long run. So starting by thinking, the micro account idea isn't necessarily bad if it's your path to getting to, trading one lots profitably, one lot tick drills. That's a great drill to do in a small account with real money, because you learn really fast. Put 5 grand in an account and do one lot drills until it's 10 grand or gone. That's a really good idea, but many people can't afford the $5,000. And I wish I could give it to you so you could do that, because it's that good, it's that useful. But if you instead think about it from the point of view of a business, I don't want to have a restaurant that has seating for 2. Because I could make the 2 best dinners on the planet every night, and I would fail miserably because it doesn't have critical mass. It's not enough money. Therefore, it's not going to work. That business model is not a legitimate business model. Okay? Dr. Shaw, I'm referring to doing it any way you want. This is a great question because it comes up over and over again, and I really want you to understand it. The 1 tick drill is to stare at the market and using the dome. You can't do it on a chart because you won't see 1 tick. You got to do it on the dome. But the idea is to just practice your ability to see what the very next thing happening will be. And it seems really stupid until you do it. And if you read all the comments about the people that have been doing it, it is the most educational thing you will ever do, because it will teach you order flow, but it'll also teach you where order flow doesn't work. Like what Darren was saying about, in longer term, the weight setup trades of his, the order flow can be deceptive, and that's very true. You can have order flow freak you out and spook you out of a trade that's a really good one if it's a weight setup, because the order flow is not that significant at any one point. It's the collection of it. So seeing any individual price level getting sold doesn't mean anything, but seeing like a whole block of price levels getting sold, then you need to think, how does that impact my, my trade, my weight trade, or my intraday swing trade? So it's a really good drill. And people get really frustrated because I won't tell them the rules for it. And the point is, there are no rules. There's no stops, there's no targets. Just get in there and try to make a tick. And sometimes you'll make 3 ticks, 5 ticks. Don't try to go for much more than that, because it defeats the purpose. But where should your stop be? Anywhere you want. I suggest not using one at all. Just learn to read whether you should be in the trade or not. And it's a really great drill. There's a bunch of other drills that down the road I will share with you. But that's one. If you want to be good at trading 1 lots, do the 1 tick drill. You will become good at it. I promise. Okay. So I want to go back to this trading as a business thing. You have to think of it that way. So if I open a restaurant and I have 2 seats, I could have the best restaurant on the friggin' planet, but it's not going to succeed. I'm never going to make any money. And that's why, ultimately I'm doing it, right? So don't open up, a hot dog cart, which is analogous to the $50,000 Top Step account, and think you're going to trade for a living. You're not that good. The best $50,000, again, using Top Steps metrics, account people I know can pull a couple $100 a day on average out of it. That's a really good run rate for that size account. You can trade up to a 5 lot, making, $200, $300 a day, trading 1 lots, 2 lots is pretty easy if you're good at it. So that's the kind of goals you should have for something like 50K. But if you think about that, okay, well, I can make a couple $100 a week, a couple $100 a day, and maybe 70% of my days are winners. So do the math here, guys. You're gonna have a grand total of $1,800 a month left over once you pay expenses. In other words, it's not a business. It's a hobby. It's a sport. I don't know. Call it whatever you want. It's entertainment, but it's not a business. A business has to make enough money to pay its expenses and ride out the ebbs and the flows of cash flow. I've gone months and had my trading not work, and I'm pretty good at cutting that short now. But it's not uncommon at all to hear traders say they'll have a 6-month losing streak. It happens, guys. We're human. And if you're sitting on a $500,000 account and you're not taking excess risk, that won't hurt you that much. It probably won't even hurt your profitability for the year. But, you know, if you're trying to double a $50,000 account every year, you're gonna fail. I promise you will. I mean, there's just no other way around that. You're kidding yourself. So you need to go into this with the understanding that, okay, I'm going to get the best possible equipment. I'm going to get the best possible education and platform and data feeds and high-speed internet connections. And then I'm going to get as much money of other people's money as I can. That's kind of where your business plan has to start. And then, of course, you know, like anything else, you need to make it realistic. Okay, you know, if you're living in the United States or living in another country and working a job that barely, you know, pays your living expenses or doesn't pay your living expenses, it's going to be hard to pull that off. So you have to get creative. And I know many of you are. You know, you have to build computers from spare parts, and you have to, you know, constantly scrimp and save and scratch and claw for resources. And what I'm telling you is, again, that's normal. And I had some benefits in this game. I had a lot of other resources to work with. You know, if I was involved with a startup that was successful, and a couple of those, I was lucky. I was in my 20s when that happened. So, you know, getting a big payout from a startup gives you a lot of room to fail. And that's exactly the way I looked at it. I didn't look at it and say, well, now I'm rich and I'm going to get richer. Don't do that. What I did was I said, okay, I just made $1 million. I was 19, 20 years old. Actually, just 20, I was between 20 and 21 when I got that first payout. And it was 7 digits. And I was like, wow, I'm the king of the world. I bought a big house. I had 3 sports cars, you know, all that nonsense. And guess what? It's the wrong answer. I knew it. It felt wrong. But what I started doing was I started thinking, well, I could either try to get richer and be like one of those assholes, or I could try to really use this for freedom, you know, which had been my goal all along. So once I started thinking that way, it became a lot easier. So, you know, and I'll tell you, again, you know, I have stories I could go on for hours, but so that was, you know, I was between 20 and 21. So this would have been like 1981. And in 1987, I had a massive stroke at age 27, and I spent 6 weeks in the UCLA Medical Center. And a year and a half after that, I declared a bankruptcy. So, and then 4 years after that, I had a 7-digit net worth again. So, you know, you're going to go through ebbs and flows, guys. It's going to happen. It's going to happen. That's life, you know? You just have to learn to adapt and improvise. That's really what it's about. So let's go back to, you know, trading as a business. Let's see, I'm just reading some comments here. The more one took tools, the better you can be. Will allow you to meet a possible Bubba. Yeah, you know what, Philippe, that's a really good question. If you're trying to find your Bubbas, then here's the way I would think about this. And I know a lot of you are struggling to find it, although, you know, like Amy shared, and again, these are great shares. I strongly encourage you to go back and read the Slack. And I pointed out a few of them, but there's a bunch of good ones. They're in Anything Goes group chat. They're in Questions for Doc. There's some in Process shares. Really go in and read that stuff because, excuse me, I'm burping. Where I was going with that one was Amy made a comment about, you know, she always kind of had in the back of her mind that, you know, the scalping kind of made sense, but, you know, and that path that her thinking is on is the kind of path you all need to be on, you know, and in order for that to get you where you want to end up, you have to make the place you want to end up be reasonable. So that's the moral of the story. Think in terms of $500,000 accounts and being able to comfortably trade 20 lots. That should be your business plan. If you're thinking, you know, I'm going to get into Top Step, I'm going to do a 50K account, I'm going to get out with $5,000, I'm going to open my own account with my $5,000, and I'm going to grow my equity. It's a nice dream, but it's not realistic. 1 or 2 failures and you're going to get into that loop. And everybody, I know you're going to be able to identify with this, where, you know, once you start making mistakes, you just keep making them. And that's why the Top Step weekly loss limits are there, to keep you out of that, where, you know, just one bad thing turns into another bad thing. And I know you all can identify with that. We've all done it. So rule number 1, get the biggest amount of other people's money you can. And the way to do that is to learn how to trade small, but do it in a big account. Okay, I just cannot emphasize that enough. It takes the pressure off. And don't think, you know, I'm going to get funded in a month or 2. You know, give yourself 3 months, 6 months. You know, make an investment in it. I know a couple of you are posting, it's really hard to do that, you know, when you have a minimum wage job or you have 2 jobs and then you come home and you try to do your trading stuff between the 2 jobs. I get it, guys. You know, I'm the guy who was, you know, leaving my trading desk, you know, for a break from writing code and go drive Uber. You know, I'm telling you, you got to find what balance works for you. You cannot think that there's some simple path or that you're going to skip all the hard steps. You know, I shared this in the Slack, and I can't emphasize this enough, that, and some of you, I think most of you are starting to understand this now, but, you know, it took a little while to get there. This comment that I made right here, that my process has been a work in process for 40 years. And the first 9 years, I didn't really know I needed one. And then I started doing them, but I didn't really get good at it for another decade or two. The number one benefit, this right here, okay, the number one benefit this workshop has for all of you is that my learning curve can shorten yours if you just listen. And that's why, you know, from the beginning, I told all of you just to shut up and forget everything and be a blank slate and listen. That doesn't mean everything I'm saying is right and everything you know is wrong. That's not what I mean. What I mean is that I can save you a lot of time if you hear what I'm saying, okay? All right, let's see. So trading business plan. It's critical that, number one, you make it big enough, okay? And I would encourage all of you to be thinking like 100K or more if you're using top step metrics. I think you can make the 100K work. And it's a little easier to hit $6,000 targets than $9,000 targets. So, you know, that's kind of my view on that, but I'd be happy to talk to any of you individually as to how that might apply. So make sure you have enough scale, first of all. You know, don't try to do it with a $30,000 or $50,000. Not if your goal long-term is to be a professional trader for a living. If that's your goal and you're going to try to go the other route, and I'm not saying this is not an idea that could work, but I'm telling you it's going to be harder. And that would be the idea where, okay, I'm going to get a $50,000 combine. As soon as I make $5,000, I'm out of there, or I make $10,000, I'm out, whatever the number is, put it in my own account, and then I'm going to go trade my own account. Okay, you're going to blow that account up. 99% chance you will. However, that might not be a bad thing. So if you're kind of thinking that path, maybe your business plan should be both. Do the 50K with the idea of getting money out, but not closing out of Top Step. Maybe Top Step becomes where, you know, you trade with a little more risk because it's their money. And in your $5,000 account, all you do is, you know, 1 tick drills and make a few $100 a day. You know, again, nothing wrong with that. That's a really good plan because it's logical, and it stands, and I hope this translates, it stands the test of reasonableness. If you can take your plan and explain it to another trader who knows what they're doing, not a furu, and they say, yeah, that makes sense. You know, I could see how you could execute that over 18 months or 2 years. Then you're on the right track. But if you're coming in and you're saying, well, you know, like some of you have said to me, and again, I'm not picking on you, but yeah, you know, here's my plan. I'm going to do a 50K, and as soon as I make $5,000, I'm going to put it in my personal account. And I think with the $5,000, I'll be able to make about $5,000 a month. And so then I'm going to quit my job. And I mean, I have to contain myself so I don't laugh at you when you tell me that, guys. And I'm not picking on any one of you because I've heard that from at least a dozen of you. So, you know, it's just everyone thinks that. It's just not going to happen. It's not reality. But it could be that you could put that money in your account, and then, you know, maybe you don't take 5 out, maybe you take out 3, so you still have some Top Step money, and then you work it up to 5, take another 3 out. You know, maybe that's how you pay yourself. But put that money into your account and let it sit there till you can build up enough to feel comfortable taking risk. I want you to remember my emotional state when I went from a couple of $100 winning to down 3,000. And, you know, it shouldn't phase you. If it's phasing you at all, then you're not trading enough money or you're, you know, trading really poorly. I don't know. I mean, normally, again, I wouldn't have gone so far with that. I wouldn't have used as much size. I was trying to exaggerate it so you would see it. But, you know, with that in mind, there's days that I screwed up worse than that. So, okay. Now, so again, this is all about your trading business plan. Number 1, make it big enough. Number 2, it has to be able to pass a test of reasonableness. And I got that from business school. I went to B school at UCLA, and you know, in every MBA program on the planet, they will talk to you about, you know, tests of reasonableness. Or the latest one is, you know, having a scaling, for example, an app to, you know, a provable level. So, you know, the least expensive provable model. You'll hear that a lot, that people are trying to do that. And you know, those are great models and paradigms to use in the business world. But in trading, you really need to think in terms of scale. You have to, because that's the only way you'll ever get the kind of numbers that you all want, you know, to be able to do this for a living. Now, in the terms of the timelines of this, and I have two more really good points, and then I'm done and I'm going to take questions. And again, I apologize I'm talking so much, but I think this is really useful stuff. So the last three things, number 4 is a really critical thing, and I've mentioned it all through the pieces, but the timeline of this, okay? There's a right way, there's a wrong way, and there's a best way, okay? And that's my opinion. Now, what I'm going to do is I'm going to temper that opinion slightly. I'm going to say there's a right way, there's a best way, and there are other ways. So what I mean by that is I think the right way is to get as much scale as you possibly can with other people's money, like 150 grand a top step, trade the size and take as much time as you can. That to me is the best way. The absolute wrong way I've already described to you, you know, thinking you're going to make a living with a $50,000 account and trading too much size. There are other ways though. Again, that was an example of, you know, the idea of getting some money out, putting it in your account, getting some more money out, or if you truly have one executable setup. Here's another one. I think Lee brought this up a couple of weeks ago. If you can truly get down to one bread and butter trading setup that works, you know, multiple times a day or even multiple times a week, you know, the Open 5 is certainly one of those, then a good business plan that succeeds in the test of reasonableness would simply to be, okay, I'm going to get the 5 grand out of Top Step. I'm going to put it in my own account. I'm going to trade 1 and 2 lots of that one setup only. And that's all I'm ever going to do until I have $50,000 in my account. That is also a good plan. Very tough to do that because you're going to start seeing other setups and you're going to want to test them, and then you can't because you can't afford the risk. That's why you need other people's money. Or that's why, for example, I use Top Step the way I do. It's a development lab because it's a really good accountable way to test things without actually using real money, because you have to treat it like real money, because if you blow up your account, it costs you $99 instead of $3,000, you know, but it's a really good environment for testing. I love it. And I just, you know, I like the guys, and it's my way of investing in them because I couldn't get any of their stock. Okay. So let's see. I'm going to do the last 2 points and then I'm going to take questions. I see there's a couple that are coming up there. So please post questions now. So that's the timeline component. And then the last item is really, I already covered the last one of the last two, which is a linear versus a flow cycle. I think you all should be thinking in terms of flows because it has a start, a middle, and an end, and then you start over. But ultimately, I think you will find that the approach of being linear, like mine, will make it easier for you to just walk up to your platform and see a trade and execute it. But until you can do that without 5 minutes of context, again, using my example, you're better off using a flow that is a cyclical kind of, you know, thing, like I showed you examples of. The last thing, and probably the most important psychological part of this whole thing is, and again, I don't know how well this word translates, but I think you'll get the idea. The word is compartmentalization. Compartmentalization. You have to build your process for you. And many of you have life events that go on around what you do, trying to be a trader, that will impact your productivity significantly. You have children, you have an infant, you have a mother with Alzheimer's, you have a back injury, you have a job, you have 2 jobs, whatever it is, okay? So what you need to do is you need to get really good at compartmentalization. When you're doing your job, do your job. And when you're trading, trade. And you need to really just focus your mind. Much harder to do than to say, but I strongly encourage you to practice compartmentalization. I have a good friend who's a very high level hired lawyer in the government in Colorado. In other words, she's not elected. She works for someone that's elected. She was hired by them, who's very high up in the state government. And that's all I'll say about her personally. But anyway, she's a single mom. Her husband was a deadbeat, drunk, truck over-the-road truck driver that crashed his over-the-road truck while he was drinking and on the job and killed himself. And so she had a law degree and but had just gotten out of law school when that happened. And so two young kids. And anyway, and I was actually dating her before I left Colorado, and the kids were at that point a little older. They were just about to be not quite teenagers, so 7, 8 kind of age. And I asked her, how do you do it? I mean, that's such a hard thing to do. And she said, I wasn't able to do it until I learned to compartmentalize, and you have to really be good at that. You're going to have to be able to segment off parts of your brain and break things up. And that's gonna, that ability, that skill is gonna come up a lot in trading, but I won't elaborate on it more than just to say, I really think you should try to focus on being able to do it and learning to do it. And the last comment I'm gonna make is, you're gonna as a trader, you're gonna get frustrated, which is gonna make you cynical, and it's gonna make you feel despair on the days you do not do well. And what I, again, strongly encourage you to do is figure out ways that work for you so that despair and cynicism don't impact your skills. You don't get to the point where you're so, you've tried so many things that don't work trading. And I know a bunch of you identify with this, that, every time somebody suggests something, your first reaction is, and you just crabby about it. Cause how could I, that's despair and cynicism. It's just like, I've been through this, it's never worked, and fuck you. Okay. And what you need to learn to do is that you're going to feel that it's going to be there a lot. And, it's just part of the game. And so it's really important, to avoid social media, and I get on Twitter to argue with gurus. That's my primary purpose there. Be very careful. If you had a bad day and then you go on and you're, looking at the Top Step group, or you're talking to other traders and they're talking about how great they did. And you kind of thought you were on the wrong side of the trade, but, now you're like, God damn it, I'm such an idiot. You know what? You just can't go down that road. You have to go down that road and say, okay, I got that one wrong, but next time I'm going to get it right, or I'm going to get it right faster. And the way I'm going to do that is I'm going to go back to my process and I'm going to figure out what thing I did wrong, which element was it? And, if I was just going to dissect my Friday, the setup wasn't very good. I was kind of forcing a setup into something because I wanted to show it to you. So, I would have looked like a real genius if it had worked and I'd made a bunch of money, but it was also good that it didn't, because, then I can critique why it wasn't necessarily a good setup. So, anyway, as we go on further, integrating the setups and integrating your thinking throughout the day as things happen, as we transition from, the kind of behavior that we've seen, like we saw here in NQ. Let me just pull this back up for a second. It's real easy to get bias when something like this happens. Let's say you tried to trade this day short and you got hosed all day. So now going into Saturday or Sunday is reopened today. And this week, you're feeling burned on the short side. Well, guess what? That's going to automatically, as a human being, make you less likely to want to take shorts. And that's probably the wrong answer. It doesn't mean you should get short right now, but it means, you have to still come in as unbiased as you would have before that event happened. So whatever elements you need to be able to build that into your process, find them, test them, make them work, because that is how you get to being able to consistently remove money from the markets, which is your goal. And that's how the market's goal of making fools out of as many people as possible becomes consistent with yours. Think about that. The days that I am just in the zone and scalping and just cleaning up, or, the days that I put a flip trade on and then it flips, and I'm just watching a 5-figure trade just get better and better, those are the kind of days that your ego can definitely jump in and make you think you're a genius. And, if you carry that into the next day, and I've heard this from a lot of professionals, one of the first things I used to do was I used to, think how I felt the day after I lost a lot of money, because that would get me out of that just insane bias that this kind of price action can create. Because, just as much as we had that one, there's a chance, whoops, I didn't want to do that. Not a chance, there's a likelihood that we're going to get another one like we saw. Oh, shit, there's enough days here, sorry. I forgot I put that back. Let's zoom out. Okay, so So, it's just as possible to get a day like this or this. And, and a lot of this is happening overnight. So every one of you guys that's trading in Europe should be thinking, oh, this is really cool because all this opportunity is coming, when I can take advantage of it. Those suckers over there in the US have to get up at 1 a.m. to play this crap. So, that's how I'd be looking at it if I was over there. All right, let's take questions and see what we got. Okay, let's see. We did that one. Okay, answered that. Understatements is your guidance on how to handle the wealth once you attain it. Yeah, my solution to that, Darren, is minimalism. Anything that you would normally associate with wealth, you won't find associated with me. I drive a car that's 15 years old, I think, and I rarely drive. When I was Ubering, it was fun, but I used to have a garage full of exotic, expensive sports cars, and you know what? That stuff it's dukkha. That's an Indian term from Buddhism that means it's suffering, it's grief. Dukkha, I think is how that's spelled. But anyway, so for me, it's about freedom. I'm perfectly happy with 20, 30 grand a month to live on, which I know sounds like a lot of money to you, but if you've been wealthy and you can really get trapped in that, keeping up with the Joneses stuff. So and also I haven't shared half of my stories with you guys, but when you've made money and then gone bankrupt and done that once or twice through a cycle, you also learn that the game isn't about whoever has the most wins, and that's kind of what you're taught when you're a kid, that just go out and win and more and capitalism and get as rich as you can, and that's nobody wins that game is the conclusion I came to, but it took me a long time to learn that. And the way to deal with that is whatever works for you. For my sister, it's being a Hollywood celebrity, and that's one of the thorns between us. Hollywood made my sister into something that she didn't used to be, and she's still that person she used to be, but with a Hollywood cover. And she'd be the first to admit that's true. And for me, a minimalist living in the woods in Montecito, I just, to me, that seems like, okay, when you grow out of that, let me know. Cause that stuff is temporary and it's meaningless. How big your house is, how expensive your car is, how big your bank account is, all that stuff. So anyway, that's my response to that. Failing is not an option in Europe. Okay, well, I do know, Samer, that many of you, and I think even, more extreme cases than yours, I think there's a lot of folks here that, it's very day to day. They're in survival mode. And, if you lost your job, you'd be in deep crap. I get it. I've been there. I know that. I get that. So you have to adapt your business plan to making that life situation work. And I'll tell you right now, the solution to that is not how fast can I get funded with the smallest amount, because you're going to get a taste for it and then you're going to be undercapitalized like everybody always is. And that's why, just, anecdote again, but that's why Top Step refers to, 50 grand and 150 grand and 100 grand, because that's the mentality of trading a 15 lot. You shouldn't be trying to trade 15 lots or 10 lots without 100 grand kind of cash flow and equity in your account. If you do try that, you may succeed in the short term, but the best traders on the planet just don't make the kind of returns you guys think they do. Pete, somebody quoted Pete from Jigsaw saying, if you can consistently make $500 a week, and yeah, that's a really good way to make an entry-level living as a trader. And that's a really good way to look at it. But what I'm telling you is that, and getting to that point is a significant accomplishment. But what I'm telling you is the minute you get to that point, you're going to realize that you need to be thinking bigger than that. So anyway, let's see. TST says, after you get 5K funded, you can ask for adjusted risk. Okay, Remo's question is a great one. Okay, Top Step is two things, okay? And they sell subscriptions to what in effect is a really good trading education service. That's really what their core business is. And that's where their $8 million of 2018 revenues came from. And that's their growth model. But they also realized in the process of, teaching traders that they were going to come across rock stars. And so they put in their business model a way to do both. If people get funded and they're making a lot of money, then, we can split it with them and everybody's happy. Flaw in that model is that if you are a rock star, you're not going to accept an 80-20 split. A rock star might get a 95-5 split at a good prop firm. Again, depends on what markets you trade and the firm and all that. So the answer to that question, Remo, is Top Step's default answer is, let's say you have a $50,000 account and you're trading it successfully funded and you want to go to a $150,000 account. What they'll tell you is you need to do another combine. Okay, and that's the stock answer. The reality is it used to be a different way, and reality is it still is a different way. Because the reality of the world, this isn't Top Step, of anything in business, is that everything is negotiable. So if you are a funded trader with a $50,000 account and you're putting, $10,000 a month profits on the boards, they will negotiate with you. They will split more equitably for you because it behooves them to do that, because if they don't, you'll go away. Now, what are the numbers? They're whatever you and them agree to. And, they may tell you, oh, no, we don't do that. That's a negotiating tactic. That's like when you call your broker up and you say, I want a better commission rate. Oh, I'm sorry, the best one we offer is the one you have. Okay, well, I'm going to open my account over. Oh, well, 1 second. We might be able to give you that's what'll happen. So, it's just negotiating strategy. But I can tell you this right now from personal experience with, prop firms and with investors that fund traders, that you can do anything you want at any split you want if you can justify it, which goes back to the test of reasonableness for your business plan. If your business plan's reasonable, then anybody would want to partner with it. Most of the investors in Top Step are looking at, like I said in the last session, if I give them 100 grand of my money and they give it to a trader, my downside's totally protected. And then the 20% that Top Step gets, I have to split with them after expenses. So, if I'm lucky, I might pull 5% a month, a couple percent a month would be a really good return for that investor. He's thinking like a VC because that's what he is. He's a private equity investor. And that's the model. So the answer to that is, you may have to be tenacious. You may have to have some good negotiating skills, but literally everything in this business is negotiable. There's just no exceptions to that I'm aware of. Have people ever gotten to 150K from a 50K combine? Yes. Will Top Step publicize that? No, they don't. But if you look at some of the interviews and stuff, if it behooves them to do it, they'll do it. It will take more than 1 month of good results. And if I were you trying to do that, I would not be withdrawing money. I would get a 50K combine up and I would just make that equity grow as fast as I possibly could grow it. So that, 3 months later, it's 75,000. And you say, guys, I like our 80-20 arrangement, but you can see I'm really good at this. What do you say we do 150 and we go, 85-15? Are they going to say, no, you have to go through a combine? Come on, guys, they're not stupid. Because, you're not going to go through a combine. You're just going to leave. So they get it. They will get it. But, they're just not going to make they're not going to make a big deal of it. Okay, let's see. The value of the TST Facebook group is recognized when it's involved from being. Yeah, exactly, Lee. And that's where I met you. You and I were picking on newbies and trying to help them at the same time. And I saw that in you. I could see you knew what you're talking about, and you had their best interests in mind. And sometimes you have to be an asshole to do that. Apologies to Dr. Shaw. I've been an asshole to him before, but you know what? He needed it, and. That's, there's been times in those groups I've done that to people. I've just said, you are just totally full of shit, and I'll have an argument with them, but I'm trying to make them better. I'm not trying to be right. I'm trying to help. And my way of doing that is to be pretty in your face because it suits my personality and it suits my experience teaching people. That isn't the best style for everybody. You may think I'm really obnoxious and, you need somebody who's much lower key, and that's cool. You need to find your bubbas. That's all part of it. Somebody asked me, I think Amy asked me if, having the right hardware is part of your bubba. Of course it is. Everything's part of your bubba. What you had for breakfast is part of your bubba. And, you've seen me over the last couple of months. I've been posting pictures and stuff. I'm redoing my platform. The last time I did that was 2014 when I built my current server. And I had it running 4 monitors and, one big TV in the middle. And, you guys have all seen that. And, just this year, finally, I got to get this done because, if I don't, I'm on all these old versions of everything. So I'm finally doing the transition. So, those are all parts of it. and it's very individual. Okay. You know, we're all ignorant. That's why, yeah, I see you guys talking about the ignorant comments, and, you know, we're all idiots. Until you understand that and can say that in the same sentence with saying a comment like this, that, you know, my mission is to be the best scalper ever. You know, I have the skill set and I have the experience and I've been doing that. I'm pretty good at it. What would it take to actually prove it? Well, one of the things I keep saying is I want to do a $2 million annual challenge. That's $10,000 a day on an average of, you know, the 200 trading days. There's actually a few more than that. And I may start that this week. I don't know. I love the idea. I've never been feeling up to it, but that's a really good way to do that too. You know, it's you have to just nurture your bubbas, and that would just be a way for me to just be so friggin' accountable to the world, because I would be doing it publicly. You know, that every mistake, God, a mistake like I made on Friday, I'd never heard the end of it. But, you know, that's the whole idea. If you're not emotionally strong enough to do that, then don't. So, you know, how you choose to manage your bubbiness is again very up to you. Okay, let's see. Treat it like a customer complaint for a restaurant. Yeah, you know what? That's a really good way to put it. You know, if you divorce yourself from that you made the error and just say, okay, the business made an error, and how can the business fix it? I think that's critical. And, you know, one of the conclusions that I came to pretty quickly using your restaurant metaphor, and the one that I started with a little bit earlier, was having the best restaurant in the world that only serves 2 seats isn't going to be profitable. I can be the best one lot scalper on the planet, but unless I can do that with 20 at a time, it doesn't matter. And so that's why so much of the stuff you've seen me publicly post over the last 18 months has been about one lots, because I have been gradually working to scaling to the point where I could truly scale my scalping to, you know, consistent 10K a day. I can do 10K a day. I've done 50K a day, but I have never tried to do it over a really long period of time. And given my health, you know, that would be a real challenge. So you need to find your own challenges and your own bubbas and your own ways of making yourself feel better and your own ways of nurturing yourself. And, you know, gosh, there's the only hard and fast things I can tell you is that you will never be done. Thank you, Darren, for mentioning that in Slack. That's completely true. It's always progress, not perfection, number one. And number two, you have to forgive yourself. And you have to understand that this is about you, but you can't take it personally. And that's a really hard thing to learn. That's the last thing I'm going to say about that particular thing, but I want to emphasize that, which is why I'm saying it's the last thing I'm saying about that. You know, it's a really hard thing to learn, but that really should be your mission. And that's why I spend so much time talking about process. Look, setups are going to come and go. You'll discover new setups. You know, I think it was Alessandra's that said, you know, the closing 10. That's really what I call the, you know, the market on close. And I'm not talking about market on close orders, but just, you know, the energy of the market at the close. And it is one of my plays. It's right there. It's my MOC play. I just don't talk about it because it doesn't really have any consistent factors. It's just some closes are really easy to trade, you know? So, but again, you may come up with a really good setup that works, you know, every day, and you should do it if you can. Okay, let's see, other questions, comments. Do you have any knowledge of the best funded traders over time? Does anyone support themselves through it? You mean through Top Step, Darren? John, thank you. You just said something really important. You realize that you don't know what you don't know. You know, that's that Dunning-Kruger thing. We automatically assume that we're smarter than we are. And the minute you can get past that, you will become better at life. So yes, okay, Darren. I know of a few direct examples. I don't, you know, participate actively with the funded people because you know, I've never really tried to do that with Top, but I've been to a few of the meetings on, you know, at their physical location, and I've met a few. There's a lady that I met that was one of the first funded traders, and I forget her name. She's still with them though, and it's got to be 6 years now, and she's still trading, I think, a $50,000 account. She's just ridiculously consistent. You know, makes a couple $100 a day every day. You know, and has a loser day now and then, but you know, probably 80% winning days, I think, maybe 90% winning days. So I know of a few, like I know of her, and I know if there's one guy that's taken a few $10,000 payouts. I think he's Italian. I met him again at that event. but Top Step is a small part of the universe. You know, for example, if you go over to Axia, you know, I know some of them personally, and there's a couple of seven-figure traders there. SMB has a couple of seven-figure traders. And I'll tell you though, that's the top 1%. You know, if you think you're going to be $1 million trader, you're going to have to be in the top 1%. However, the middle class of traders, and this is again a point that I just can't emphasize enough, the middle class quality of traders, the people that can consistently make 50 or 100 grand, is the least recognized group, and it's the one you should strive to be in. Because if you get good enough at doing that, you ultimately could become a seven-figure trader. But what happens is most people get too frustrated along the way of trying to become a $50,000 or $100,000 a year trader. In other words, getting to trading for a living. They set their goals too high and they don't give themselves enough money and enough room to fail. So ultimately they get frustrated and they quit. And, you know, then they go get a good job and they make a bunch of money and their bank account grows. And they say, I'm going to try that trading thing again. And then they come back and they spend another $100,000 learning. And everybody does this, guys. I mean, I can tell you hundreds of stories of people I know personally who have been through that loop, and, you know, you're all in it. So what I'm trying to tell you is how, if I were you, if you don't want to be in that loop, how to not be in the loop. And the trick is to get skilled as fast as possible and then scale as fast as possible. Okay, think of those two things. Get skilled as fast as possible. That's the one lot drill. And then as soon as you're competent, get as much money as you can possibly get, because then you have room to fail and learn and play. Remember my, the four things. Make it fun. How do you make it fun? You have to be able to play. Friday was fun for me because, I felt crappy and I just didn't feel like being really rigid. So I wasn't. And it worked out fine. I made $147 or whatever. And you guys got to see, a bad day. And so for me, as far as I'm concerned, that day couldn't have been any better. That's how you have to look at it. Again, I don't want to struggle or spend too much time talking about my health, but I've had a lot of crazy stuff happen. A stroke when you're 27 is really rare. I could literally drop and disappear tomorrow, and you guys say, what happened to Jeff? Why isn't he in the class? Well, he's not here anymore. That could happen, and if you kind of take that approach to any business that you enter, it kind of puts life in perspective. If you've got that job that you're just totally afraid to quit because, of all the things that could go wrong, and, you just got to look at it unemotionally. Okay, can you afford to support your family? Do you have a family? Could you live in a van, and just go to the office and trade? A friend of mine does that. He lives in an RV. I know Amy goes back and forth to the military bases with her husband and does something like that. You know what? Just find your mechanism. The trick is don't care about anyone else's mechanism. Just keep trying stuff and be really diligent about keeping the things that work and getting rid of the things that don't work, or at least for now. They may work later. Okay, let's see. John Nystrom is funded. Is he really? I didn't think he was. But you know what? Again, I don't think he makes any significant amount of money. That strategy doesn't. A trend following strategy generally will make the return of the market. So, and that's what he does, that he's trend following and fading trends at really bad places to do it with Bollinger Bands, but whatever, in certain market conditions and really strongly trending markets, that probably works pretty well. So like Friday, it might have worked. In fact, Friday probably would have worked really good, so as long as you were on the right side of it. So yeah, and don't just automatically assume if somebody's funded, they're good. Pete Davies has never been funded. I've never been funded. I've never even tried to be funded. And again, I may change that really quickly, but I've been through dozens of combines because they're really useful. So again, make sure you understand your mission. And okay, let's see some other comments. And by the way, I don't know John Nystrom personally. What's wrong with John Nystrom is that he thinks that his thing is the only thing and that it's right and that it's always right, and that's the problem. He just doesn't have the maturity of a trader to understand he basically has a one-trick pony. He's got one setup that works under one set of conditions. And, he's too busy spouting his ego on the Top Step group instead of learning from other people. And that's why, you don't learn anything unless you're not talking. And every time that I blocked John, because every time he responded to me, it was to tell me about how his system works. And I was like, John, thank you very much, but I don't need Bollinger Bands, and I know how they work, and they're not useful for my strategies. Then he'd come back and explain to me why I was wrong. And
that's the kind of discussions you just don't want to waste your time on. So I blocked him, and I block anybody who does anything like that, because it's just not worth wasting your mental energy. You have much too much to do working on your own stuff. So, that doesn't mean that what John posts about his strategy isn't something you can learn from. Just, as Lee and I have pointed out over and over in that same group, the limitations to that strategy he himself doesn't understand, which makes it just wickedly dangerous in a group of newbies, because it's the blind leading the fucking blind. And that's my anger and my passion about John Nystrom and people like him just being the worst thing that you guys could ever experience, because you get all the wrong pieces of information from a guy who, again, what I said a few minutes ago, people get to that level when they have one thing working and they become a furu and they honestly don't understand what they don't know. So, bless his heart, John's probably a nice guy. I just have no use for him. Plus, politically, I just can't listen to his nonsense. Okay. Yeah, that's the Bollinger Band. Nurturing the Bubba. That's what this is all about, Philippe. And the Bubba has a lot of facets. It's multifaceted. There's a lot of pieces to it. And you need to constantly be doing that. And I know almost every one of you, maybe one or two exceptions, when I first started this workshop and I kept talking about process, and you guys are all like, oh, shut up, like Sommer. Like, can we get to the damn setups already? You know what? But now, even Sommer, it's about synchronization with the market. You guys are starting to get what I'm saying. And I love that, because you're on the right track. You really are. Okay, 2 years, well, exactly. I never learned anything talking. And you know what? I learned doing these seminars because I give you guys information, and then you spit it back at me in terms of questions and your comments and what you post about your success and failure. So in that sense, I learn a lot by talking, but that's a unique situation for an instructor that's very experienced. That's that kind of sensei world. And believe me, and again, I want to comment on this. Numbers of you have emailed me and asked about mentoring, and I'm not ignoring you. I just have felt like crap, and I just haven't had time to give it the in-depth response I would like to. I really would like to mentor all of you, so any of you that are going into combines and whatnot, I'm happy to try to help as much as I can, whatever degree makes sense. Again, I'm not ignoring you when I haven't responded to some of those things. I get much more. I have found a couple of things in my process that as soon as I can sit for more than an hour, I'm going to fix. And I got a lot of them from you guys. They're just things that, I used to have here for a purpose, but then I realized by a couple of things you guys posted that I could make it better. I could refine it. And, I'm really color oriented. You can see I like bolds and highlights, and I didn't always do that. And I do that when I'm trying to remind myself of key points. So in this case, order flow, order flow, order flow. And that's the result of learning it and teaching it to myself. But now I'm kind of at the next level along, where, now it's more about mastering the order flow. And again, I'm not patting myself on the back, but, I automatically know some of this stuff. Like the HMOMO, I know I've got to get my stop in fast. That's the technique. But it's about integrating the techniques together for the setups. And that's the next thing we're going to talk about. And I think many of you will really find that useful. That's what Wednesday is going to be about. So anyway, I'm just flipping through my notes real quick to see if I covered all the key points I wanted to. Just going to review them, just, tell them what you're going to tell them, and then tell them what you told them. So number one, the purpose of the market is to make fools out of the most people possible. Instead of making that be a negative to you, make that a positive. Make that be, your mission is to be the guy that collects money because of all the fools. But understand, that's going to make you a 1%er, or certainly a top 10%er. And that's going to take a lot of energy and activity practicing, and a lot of energy figuring out your business plan. And so as you go through each phase, try to keep in mind what you don't know. And even if you don't know it. And try to constantly be in this improvise, adapt, overcome kind of mode, that progress, not perfection, just constant improvement. And to the extent that you can do that, minimize your despair. Understand that, you making a mistake isn't personal, it's your business. And, are you an extrovert? Are you an introvert? Are you an ambivert? How do you recharge your batteries? What do you need to do? I need to meditate and sit in a room alone for 24 hours. The dog or the cat can be there, and that's it. Phone's turned off. I don't answer emails. I don't answer the door. You know, I keep the fire alarm on because I live in a forest and we get lots of fires. So, you know, but you know, what works for you? And then, you know, last but not least, understand that, you know, building that business plan is going to take time. And the timeline that's reasonable is years, not, you know, I'm going to be profitable in trading for a living, you know, by March. It's not going to happen. Compartmentalize, put things into little boxes and only deal with them when you have to. That's what that means. So learn to box your emotions up. Don't use them to trade. When you're reviewing your trades, you need to slide those emotions back out and say, okay, why did I take profits too early? What was the emotion? What was I thinking? But again, not to be beating yourself up, but to improve your process. Okay, and I think that is the review of the agenda. Any other questions? Let's see, supposedly works consistently. Not sure what that means. On Friday, there is a Zoom distraction. It might affect you. Oh, exactly, Bar. That's if I hadn't been trying to teach, I would not have traded on Friday. I made a decision when I got up that I was going to do one of two things. I was going to cancel the class, which I really didn't want to do because I'd canceled it already once, and the one before it. And then I said, all right, I don't want to do that, but it may not go well. So I kind of just gave myself permission to do whatever I could and get it done and hopefully make it as useful as possible. Oh, yeah. So, right. Oh, you're saying that John is consistent? Maybe he is. You know, again, the only criticism I have of anybody like that is them thinking that their way is gospel and thinking it from a point of view of ignorance, because John really doesn't know very much about the system he trades. You know, as Lee and I have pointed out to him, he doesn't really understand Bollinger Bands at all, but he uses them, which is really dangerous. That's all I'm saying about them. And, you know, and I don't, you know, he may say he's funded, he may be funded. I don't know anything about that. I don't know how consistent he is. You know, all you have to do to stay funded is not lose money. You know, if you don't trade for months at a time, they will close your account. But, you know, you have to try to trade every now and then. But other than that, they are not, you know, as long as you're not losing money, they generally will not beat you up that much. So, okay, let's see. Yeah, that, you know, and again, that thing in my, you know, my process about pain and distractions, you know, that's giving yourself permission is part of it. And also like the sequence that I just described to you, that, you know, I got up and I felt crappy. So, you know, I immediately said to myself, I'm probably not completely competent. So, you know, how do I want to deal with it? You know, I could have just traded in a sim, but the problem with doing that is, you know, you don't get the real life experience. And there are other days I would have made that decision. Oh, I'm not going to teach the class, but I'm too awake to lay in bed. So, you know, I'm going to practice in the sim all day. You know, maybe I'll do that. You have to figure that out for yourself. Okay, this is still running a little long. So let's see if there's any final questions. If not, I will wrap it up and send you guys out the recording. What's the size you advise on 150K? That's a great question. I have this little worksheet that I shared once before that I don't know if it was someone, I did it for someone I was mentoring. Yeah, this one was set up for 150. This is kind of the approach that I suggest you take if you're going to try to do 150. If you hit $1,800 5 days in a row, then, you know, you made step one. And that's kind of a fun thing to do, you know, just to kind of get yourself going. And what I did with this person I mentored was I said, well, you know, let's just go for $900 minimum, because that's what you got to do in step two, you know, and that is a really nice number for this size account. So that's the answer to your question. So what I did was I said, okay, and this again for this individual, I said, all right, so if we're going to look for $900 profit a day as our objective, you know, our one and done kind of thing, then the reality is, you know, we certainly don't need a 15 lot to do that. And what I've said over and over is I try to encourage you to do the 150 with the sizing from the 50. So that would be, you know, 1, 2, 3 lots, you know, and then once you had scaled up, you know, as many as 5. And there are setups that certainly would justify a 5. And if you think about it, you know, in a 5 lot, that's $250 a point in the ES. So, you know, to get to $900, you know, you only need 3 or 4 points. So, you don't need to use those 15s. On the other hand, if you get an overnight flip or you get, a just heavy H Momo day, that's just going one direction, then, why not scale into it? Open up the trade, and again, assuming you have a $150,000 account, open up the trade with a 3 lot. And as that's working, put on 6 more. And now you got 9. That's a pretty good size, but you still have 6 more, so you could almost double it, or certainly another third, right? And if you think that way as it's working, don't ever use that if it's not working. And again, when I'm adding to a range trade, that is not adding to a loser. I'm talking about, you're in H Momo and you do not have a stop between your entry and the market. In fact, you're upside down. Don't ever add to that, because you cannot, the market will make you broke before you can average into those kind of trades. It just, it might work 1 out of 10 times that you average into it successfully. And I know all of you have tried that. We all try that. It just doesn't work. The right answer to that is to scale into the winners. Okay, and you hear this all the time. Add to your winners, not to your losers. Yeah, but again, that's oversimplified. You need the context. What are we talking about? Range trades and first hour high lows and open fives. Those kinds of trades. You're not adding to a loser because you're adding to the concept of the trade is still valid. That's the test. But boy, if it's H Momo, only add on the winning side, but think about what that might do. Okay. So let's just one more really good example here, because I think this one will be fun. I mentioned when I told you guys about this short that I had on back here. Let's see, it was Friday. Where's Friday? Oh, hang on. I just had some more coffee. My headache going away, but I'm not thinking clearly. Okay, so I don't know if I have enough days here. Yeah, okay. So this day right here, whatever day that was the day I think I was doing that. I may not have enough days here. Anyway, the point is, just using this day as an example, let's say this was the day you were trading, okay? And, in the overnight, you had been playing short. And, it's always a good idea to kind of get flat for the open. But, let's say you were short from up here. So maybe at 84.40 and now it's, 84.20 and you still got one profitable. I wouldn't necessarily jump out at the open. I'd probably leave that one on and see if we got, just a cascade down. And so the correct way to manage a trade like that is as it works, add to it. So, as the open just is getting sold, jump in with some more. And, when the open 5 low fails, add some more, and then when it consolidates, take a little bit of it off, but you still have some short. That's called working around a core position. And that's what I would normally do in a trade like that. And I told you I had 15 on when I went to bed, and I ended up going flat. And it was profitable, but it was just getting started. Using that kind of mechanism, you could have a 15 lot and never have it go upside down. In other words, you never have a drawdown, and you could make 6 figures in that trade. That's possible. It's more likely to happen doing, say, 10 lot in the ES. In the NASDAQ, sometimes you need to scale a little more than that because it's so volatile and you need to go in and out more. But because of that, you can also make more. I've had $200,000 days trading the NASDAQ with 10 lots and 20s. But, it doesn't happen very often. And, when you do it, you go out and celebrate. But, if you're smart, you realize, just a good chunk of it was luck. All right, let's see. So did I answer your question? I would do the 150 and I would use the scaling, at least till I got funded, I would use the scaling of the 50. I would use 5 lots. So yeah, basically, yeah, you're protecting yourself from getting ruined while you build equity and build confidence. You know what? And those are both important. The money will only give you confidence while you're making it. You guys all hear me? Okay. Profits will only give you confidence while you're profitable. The key to, and this is another docism, and I know I've been talking for hours, but hear this last one and then I'm done. Okay. Profits will only make you feel profitable for a short time. But if you have a good process, you will always feel that way. When you're doing it right, you'll always feel in the flow and it will just work. And so you'll know that when you achieve it. There's no other way to describe it, and if you're not achieving it, you'll know it too. I think a few of you have had some tastes of it, but anyway. Okay. Make it a long game. It's a long game. Look, listen to me when you guys hear me talking about my experiences and whatnot. You know, expectations, long game, right? You know, for a guy that talks a mile a minute and has the kind of energy that I do, that's a really hard thing to do. But, you know, I learned really young that anything that truly had significant upside requires that approach. So, you know, my extroverted ricochet rabbit, you know, it's an old cartoon in the United States, you know, kind of bing, 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 do everything, get it done quickly. You know, that energy can be really useful, but I also have to learn to, you know, have the long game expectations and that kind of solitude thought time to process all of those fast thoughts, you know. And so if you're at all like me, that's an important consideration. All right, any other questions or comments? Yeah, you know, I know you're just starting to experience it, Jerry, and that's why I kind of picked on you in the last session. And I picked on a few people that I feel jumped into combines too quickly. You know, again, every combine you do will be a good learning experience, but at the same time, you know, if you're going in thinking you're starting your business, make sure you have the business plan elements thought through, because most of you haven't. You know, you're kind of thinking that, well, if I get one thing going right, I'll start making money doing that, and then I'll worry about everything else later. And I know that's the way you're thinking. I did that too. You know, and it's just not the right answer. It has to be, you know, does your business plan pass a test of reasonableness? Ask other traders who are experienced, you know, and they'll give you good feedback on that. One of the best pieces of advice I can give you about tests of reasonableness for anything is whether you're male or female, ask 5 women, preferably over 40, for their opinion. Whenever I have a business concept, I get a focus group of 5 of the most just, you know, persnickety, irascible women I know, because they will give me honest answers. They won't tell me what I want to hear. And they've been around life long enough that they don't have to impress anybody. So they're not going to try to impress me. They're going to just tell me what I need to hear from their point of view, not what they think I want to hear. So that's the right answer. You know, get 5 50-year-old ladies and tell them your business plan. But, you know, that might not be practical with trading. You know, it might be practical for a restaurant or a retail store. So with trading, you know, find 5 people whose opinions you respect, or even 2. You know, hell, you got Lee here. He's a pretty experienced guy. Ask him, you know, hey, can I run my plan by you? I will happily look at anybody's, you know, post it in the group and say, okay, guys, this is my plan. You know, where am I an idiot? What am I doing wrong? What, you know, that's the whole idea of this being a workshop and not me just doing classes. You know, we had a guy join us this last week, and I introduced him, and, you know, Renato, and he's not a native English speaker, although he speaks it very well. And, you know, my sessions are a lot of talking, and he watched one on This Isn't For Me was his response. I said, well, you know, a couple of the other non-English speakers are doing subtitles, and I get it, you know, but interact with them, and trust me, you know, you'll catch up and you'll get the thinking. Don't worry so much about just listening to me babble. It's about everybody here. And, you know, there's a lot of great interactions going on in the Anything Goes group chat, and in the, you know, questions for Doc, and, you know, and I even gave him a couple of people to connect to. And I haven't heard from him. He disappeared. And, you know, that behavior is common. People are out looking for silver bullets and the Holy Grail. And, you know, Jeff has these great setups. You know, I'm going to get in and learn the setup, Sommer, and then get out and make money. And yeah, that's just the wrong answer. That's not how it works. Okay. All right. You know, it should be like I'm reading all of your minds. Because, you know, this should all resonate with all of you. You know, like I hear John saying, the more I listen, the more you realize what you didn't know. Good. That's why you're here. You know, you guys are all smart enough to assemble this yourself down the road. You know, the whole idea is to understand what it is you need to assemble, because, you know, the gurus don't teach it because they don't know it yet. And the true hardcore professional traders, there are some out there, and you hear this from them, but, you know, they're not emphatically posting it on Twitter every day. Why? Because they're out making a living trading. You know, I'm talking about the guys like, you know, the guys at SMB, you know, Merrick Black, and, you know, those kind of guys. You know, they post a nugget now and then of good stuff. You know, Pete is a good example. You know, Pete trades for a living, but he's also running a trading software company. That's a hell of a lot of responsibility. I've done it, I know, and not nearly on the scale he's doing it on. So, you know, you really have to figure out your pieces and what works and what, you know, what in your personality is holding you back, and what ways can you figure out to address it. And if you don't take it personally and you ask for lots of feedback, you will get on the right path.
Just take as long as it takes. All right. Can learn my setups and start my own room. You know what? The last time I did this, John, which I mentioned I had Dr. Jeff's Day Trade Clinic in 1999 in a MSN group. And I did a total of 500 students over a course of 2 years. And 50 at a time, that was the maximum, because 50 for me is critical mass. It's just too hard to help more people than that at once. And there was at least 3 of them that just literally copied my stuff and tried to sell it. And a couple of them successfully did for a few months until their quote unquote students realized they didn't know what the fuck they were talking about. But yeah, no, people do that all the time. And it wouldn't, you know, that's why I said before what I did. You know, I knew someone had been recording some of my videos because, you know, there's ways to measure that. And, you know, that's why I said, you know, if you're doing that for your own use, fine. You know, and one of the people that was doing that said, oh, sorry, that's me. You know, if you're doing it because you want to study them or whatever, or you need to subtitle them, you know, that's what I was hoping I was seeing, and not, you know, somebody starting their own YouTube channel and hoping I don't notice, because I will. You know, the terms are pretty easy to spot. And the whole point is, you know, it's not about my setups. It's about the process of developing them. And you're all seeing that now. All right, that's enough of me babbling, and I'm going to go lie down on an ice pack for the rest of the morning. So good, we've got a reopen coming soon. Get ready to trade it, make money if that's what you're doing, learn if you're not trying to make money. I will talk to you guys all later.